I have a lot of charts. We're going to go over some stocks, currencies. I got some ETFs down here. But there's some very important concepts that you guys need to know. Now, this is the VantagePoint software. It's the software that I use absolutely every day to perform this type of analysis, to analyze those global market relationships and figure out what should I be doing in the markets that I'm looking to trade. Now, what I want to do, though, is explain everything on the chart here, but give you a little peek behind the hood here to really understand how this works. Now, how this software works is actually using a type of artificial intelligence referred to as actually called neural networks. It's a type of learning machine. And what this technology is able to do is scan literally thousands of markets, scan unbelievable amounts of market data, find those important market relationships, and then incorporate those into leading predictive indicators. But what I want to show you here is we can actually go into individual companies here. I have Acadia Pharmaceuticals. I can go ahead and type in this market tree here, and I can actually open up these properties here, and this is what I want to show you. Now, I've clicked on this tab for Intermarkets, and if we look closely here, and this is really the secret sauce here, this is what's very, very important to understand. These are the 25 to 30 most closely related markets that are known to drive and influence Acadia Pharmaceuticals. Now, again, guys, it isn't just the broader indices. It isn't just the dollar index. It isn't just pharmaceutical companies. But you can see here we have, things like the Biotechnology Etf. We have the power shares, the Qs, the Japanese yen, crude oil, natural gas, the gold market, interest rates. So what this technology is doing is it's analyzing all of these markets and figuring out where those important market relationships lie. And actually, this software, VantagePoint, actually has a patent on that process, which is a lot different than a lot of the other things that you're going to see out in the market. There's actually 2 patents on this technology. One that identifies those significant market relationships, but then another that weighs these relationships. So it figures out, again, those positive, those negative correlations, those leads and lags, and incorporates that into a singular forecast. And that's what neural networks are absolutely phenomenal at doing, is taking a broad amount of information, but then having a singular output. And that output is what we use to make trading decisions every single day. So this is just a little look under the hood, but miles and miles apart from a lot of the other tools out there. Literally 2 patents on this approach and this technology. So now, what I'm going to do, though, is explain everything on the chart here. And something that's probably going to stand out to you is the fact that, we don't have 5, 6, 7 different indicators on the chart. And that's extremely important because a lot of traders get so bogged down using all these different redundant indicators that really don't get them the information that they need. The other thing, too, before I dig into this is, again, regardless of the markets you trade, I trade absolutely everything because of this, the output from these indicators using this approach. It's the same on the long side, same on the short side, same for commodities, same for Forex, same for stocks. So it really allows you to approach the markets in fundamentally a different way, having the confidence of knowing that, look, when you have those odds on your side, and I'm going to, explain the accuracy of all these indicators, but give you a lot of confidence, again, to trade the market long or trade the market short. A lot of people get caught up in not wanting to take short positions. But the reality is, especially this past week, a lot of great opportunities to go ahead and short the markets. You can make money when markets aren't necessarily going higher, which is very, very important. So now let's go ahead and dig into this, though. So I have a chart here for Acadia Pharmaceuticals, and we're going to go ahead and start against the price data here. Now, these are daily bars and candles. Very important to understand that this works off of daily bars and candles after the markets have closed. And you really got to understand, Asia opens, then Europe, then America, then everything shuts down for about an hour. In that meantime, that's when all the data gets downloaded, generates these forecasts for the next trading day, so that you're really going to know all your trading decisions before the day starts, but you're going to be incorporating those important markets and how they're affecting and driving that market that you're trading. Now, these are all daily bars and candles, and you're going to notice that there's a black line on the screen and a blue line. Now, the black line on the screen, very, very important to understand these concepts. A black line on your screen is a simple moving average. Simply a 10-day simple moving average, a lagging indicator. All it does is it takes the last 10 closed prices, divides them by 10, and plots that line every single day, and then as it moves forward, cuts off the 11th day, essentially. So it's always going to lag the market. It's always going to follow where the market has been, and it's also completely based off of past prices from the single market that you're looking at. So everyone understands what generally what a simple moving average is. Very, very simple. Now, the difference, though, between the black line and the blue line. Now, the blue line on your screen is VantagePoint's proprietary predicted moving average. Now, before that line is plotted on the chart, it's weighing those 25 to 30 market relationships. So it's looking at, what is the S&P 500 doing? What are the pharmaceutical ETFs doing? What are competing, markets? How are they trading? How is the dollar looking? What is crude oil doing? Weighing all of those important market relationships and then plotting that blue line forward. So it's always trying to predict ahead of time where average prices are expected to move next. Now, for us as traders, how do we want to use this information? Well, what we really want to look for, and I'll even explain there's a scanning feature in the software so we can very quickly identify these opportunities, but what we want to look for is essentially crossovers from this blue line and the black line. And what that's telling you is now that the predicted moving average has moved above or below the lagging moving average. So what that's telling you is that there is a type of trend change there, and we definitely want to take note of that and then begin to go ahead and take advantage of that opportunity based off of these forecasts. So what we want to be looking for is blue line over black line, and that's getting us our direction. I mean, simply, what is the overall direction of this market? How should we be trading the market? Additionally, you'll see blue line crosses below the black line, exact opposite. That's where we want to either be taking profit on a position, looking to go short, and then same thing to the upside, looking to go ahead and trade that market to the upside. But that's what's going to help us with our overall direction. But the whole point is that, again, that line, again, is not plotted by just looking at past prices alone. It's weighing all of those market relationships, plotting that line for you, and then allowing you every single day moving forward to understand essentially if there's been a trend change. So you're going to understand how to manage your positions moving forward. Now you see that in this example, we've got some really unbelievable rallies in the market here. Since the blue line crosses above the black line from this instance here, you essentially have, let's see here, a 58% move from when that trend change was forecasted. Additionally, you see that as the market changes direction, we get that move lower. But what's really important to understand is, whenever you get this sort of separation between the blue and the black line, the stronger the separation, the stronger the trend. And what you really need to understand is, because that is a prediction, because it's predicting average prices that much higher than that lagging moving average, that can help you really determine how much strength or weakness that there is in a given market. Additionally, you'll notice that when the market goes sideways, you really get this pinching of the lines. They get very, very narrow, indicating that the strength of that trend is weakening over time. So that indicator, extremely accurate, definitely extremely robust at keeping you on the right side of the market, not getting fooled at times. But let's go ahead and explain this other indicator at the bottom, because it's really the combination of these two tools that are really going to help us do a lot better as far as our overall trading decisions. Again, how are you making trading decisions every single day, and what is influencing those decisions? So here at the bottom of the screen here, this is what's called the predicted neural index. You'll see P index right here at the bottom, and this indicator can only be a 1 or a 0. So not any wiggle room here. It's either one or the other, yes or no, up or down. Now, what this indicator is extremely effective at doing is forecasting short-term prices. The indicator is actually looking out 2 candles ahead of time. So you should think of it as a 48-hour forecast. So how we want to use this tool is using it in combination with our predicted moving average, essentially our crossovers from the software. And so whenever we have an instance where we're getting confirmation, so we have a match between these two indicators, it's a very strong signal, and we should really go ahead and take note of it. So you'll see that once we get that crossover to the upside, you'll see that the neural index, that 48-hour forecast, is also saying, look, the overall direction that the short-term move should move higher over the next 48 hours. So, for me personally, how I like to think of this is, if you can get into a market and get that initial push into the trade, that does a lot for you. You can go ahead, take half your position off, use the other half to run your stops, and really capture some of these, much nicer, longer-term moves in the market, which a lot of traders, often miss simply because they don't really have the tools to keep them in the market during those difficult times of volatility. But what you're going to notice here is, blue line crosses over the black line. you see our neural index comes down to a 0, but still quite a bit of separation here between our blue and our black line, saying, look, go ahead and hold on to this position. You see we swing low here and move a little bit lower, but we never cross lower. The direction is never to the downside, and we see we actually get this gap higher. Now, for the traders out there who are maybe shorter term and look for shorter term opportunities, day trades, if you look at this market closely and remember that this neural index is a 2-day forecast, what you're going to be able to identify is, when you have the overall direction and this neural index is solidly up at a 1, you get very, very strong rallies higher. And you see that this indicator often holds for these, nice moves higher in the market. So you see this period of time here where direction is up, neural index holding up, it's about 29% move to the upside, but you notice, what's going on over this period of time here. And this is what's so important is we want to be buyers in the market. We want to be long. We see the neural index coming down and saying there may be some short-term weakness in the market. And in fact, you are actually going lower the next couple of days or dipping lower here. You're getting some weakness in the market there. But here, it's very, very clear. Now the direction is down. We see our neural index positioned to the downside saying over the short term, look for that market to move lower. And certainly you don't want to be short or you don't want to be still holding that long position on the market when you're getting ready for about a 13% move lower. So this is really what's critical as far as allowing traders to capture these longer term trends, but then clearly define when they need to step aside from the market. When over the next couple of days, this is not the trade to be in. Wait until things straighten out and match again based on the length of time of the trades that you like to take, but go ahead and look for these indicators to line up again before you want to go ahead and get long the market. So we see a clear crossover here from the software, neural index again strongly up at a 1, and a very, very nice rally in the market. We actually see we just had a crossover just this last evening here to the downside, and I know this market did trade off a little bit. I don't know what's going on right now, but about a 31% move just in the past 20 trading days. So imagine you're trading, a $19, $20 stock. You're able to capture essentially $12 per share, about a 60% move to the upside. Step aside for a couple weeks and then catch a 31% move. So, even just 500, 1,000 shares, this is going to make a significant difference as far as the quality of the trades that you're taking and able to capture really the significant parts of those moves, understanding when you want to be heavier on that position, when you're getting that short-term forecast and direction on your side, but then also when you want to scale back on things and go ahead and look to go ahead and take profits and move on to something else. So that very quickly is how the software works. It's utilizing this technology to analyze these sorts of relationships. But how you can really incorporate a lot of these tools together, and how I really like to use these tools is looking for confirmation from ETF markets. So regardless of the markets that you're trading, especially when you're using a tool like this, it really takes things through a whole nother level. So let me go ahead and show you this really quickly. Then we're going to flip through a couple other charts here and a couple of the concepts. But here is the Biotechnology Etf, and this is what's really important here, where a lot of traders get tripped up and really miss out and don't have the confidence to hold out for the positions that they should. How many times you get into a trade, you hold on to it for a couple days, but then it starts turning around, you start giving back some realized gains, you want to get out of the market, and you miss probably the best move. It would have made your month, would have made your a year essentially. So what I want to show you here, though, is here we have the Biotechnology Etf and Acadia Pharmaceuticals, and we saw this in a lot of pharmaceutical companies like Horizon and all these other things. But just what I want to point out is, when we have these tools and they're coming through and saying, look, the Biotechnology Etf, you see we got a crossover to the upside, neural index up at a 1. So using that approach, we don't change things around. We stay very consistent with this. But at the same time, we're getting those crossovers in Acadia Pharmaceutical. But what's so important about this is what you're going to notice is that even while the market moves lower, and we see our neural index, let me expand this out so you guys can really see this. You're going to see how these indicators really hold up and keep you positioned on the right side of the market here. So you see how the market moves higher, you get that overall trend change, but we get a significant pullback here in the biotech ETF. Now, you're going to understand that, look, there's going to be that short-term weakness. You get about a 6% pullback in the market, but critically important here, guys, look at this blue line remain above the black line. And even as prices are actually, average prices are moving lower over this time period, you're actually getting more separation between that predicted moving average and the actual moving average. So this is what allows traders to not get tripped up during times of short-term volatility, so that if you're trading the biotechnology ETF, you're not getting out of your position here. You understand, look, the direction is still to the upside, and certainly if you're trading in something like Acadia Pharmaceuticals, you can be confident that, look, even though you're getting this short-term weakness from the neural index, your direction is still up. Go ahead and hold on to that position. Now, we can see this in the semiconductor ETFs as well. Here I have, we can look a little bit closer at semiconductor stock as well as the market vectors ETF. So again here, getting our crossovers with the semiconductor ETF back here on the 16th and 17th, telling us to go ahead and look towards those markets for opportunity. So that what drives you to go over and look at, there's Taiwan Semiconductor, Cypress Semiconductor, a lot of other companies in the technology sector, but this was the time where we really wanted to go ahead and look for those opportunities to get long the market. So about 13 trading days, this is a $9 stock, guys. So, you know, imagine a $9 stock. I would imagine most of you can pretty easily go ahead and buy 1,000 shares of a $9 stock. You made about $1,700 in about 13 trading days. But not only that, when you have these tools again saying, look, now the direction of the market is to the downside. Now you want to go ahead and for this last week, go ahead and look to get short. You can go ahead and take those profits, short the market, and already made about $700 or so to the downside. Go ahead and lock your stops, trail those shorts, and make money to the downside as well. But what we can do, especially using a tool like this that's consistently accurate across all markets, is you see that, you know, here in the market vector ETF, still forecasting that short-term weakness, but keeping us in the semiconductors over this longer-term move to the upside. Look at this neural index holds up saying buy throughout all of these days. You want to be a buyer. If you're a day trader, you want to be a buyer. If you're a swing trader, hold on to that position. But once things turn around here saying, look, go ahead, take profits, go ahead, step aside from this trade. You know, I know a lot of traders, you know, I talk to all different traders. A lot of guys trade options. A lot of guys have big portfolios. They got a lot of different stocks, and they really just want to know, you know, how should I be timing these things, get better timing on the opportunities that you're in. Here in H&R Block, this was, you know, this is over the past, you know, almost the whole year so far, about 4 months or so. But you see how this really keeps you out of danger. H&R Block here, going into a downtrend, you see their predicted moving average getting very, very weak, crossing below the actual moving average. But look how weak the neural index is over this time period. And this is what's key, is when you're using a tool like this to really manage your positions, knowing when you want to be heavier on a position, when you want to be long, when you want to push that winner, but then when you want to be, you know, short, when you want to, you know, take your profits and maybe get out of the market. It's absolutely critical to avoid instances like this, where you're just getting gap downs in the chart. A really terrible time to be long, and certainly you don't want tools that are getting you long the market during any of this. You don't want to get faked out here and say, okay, well, things are leveling out, let me go ahead and try to get long. But you see that the market moved lower about 40% over 60 trading days. So certainly if you have a large portfolio, these are the sort of markets that you cannot be sitting around in and really getting killed on these gaps where you wake up the next morning and you are looking at some red on your screen. But you see how things completely reverse when it's time to go ahead and get involved in a market. You see we get this blue line, a crossover, the blue line over black line. Actually, I can go in. We can zoom in on this a little bit. But look how clear this is, guys. Blue line over black line, predicted moving average, saying average prices look to go higher. Your short-term forecast, again, forecasting things higher, but look at these rallies. When you get this neural index up at a 1, getting this nice push higher in the market, but never, ever, ever having that blue line cross below the black line. So you see if you get in right at this crossover, got a really nice move to the upside here in 21 trading days. You know, again, now when you're buying H&R Block at $20 a share, you can definitely capture those types of moves, those 17, 18% kind of moves. But you've got to have the appropriate timing on these things, guys. That's what's absolutely critically important, knowing that, hey, over the next couple of days here, should I be a buyer or a seller in the market? And so that's what's going to make it very clearly defined on, hey, what should I be doing here? Now, you know, I mentioned to you guys this has been a very interesting week. You know, usually I like to show long positions because traders like to go long the market, but the reality is that when you have a tool like this, it's consistently helping you, adjust to the market. So, let me know how many traders here, let me know if you guys go short the market. Do you guys ever take short positions on the market? Let me know yes or no, and I'll show you exactly how to do this. I talked to so many traders who they really lack the confidence to short the market, but it's absolutely for certain times. I mean, the market just simply isn't going to go up, and you certainly want to have yourself positioned to not only make money over that time period, but certainly it protects your capital. So when you get these really volatile moves in the market, the S&P moving lower, not only is that helping you make money when the market moves lower, but certainly protecting your capital from obviously being on the wrong side of the market, holding on to long positions. So this past week, and I'll actually show you, we have this scanning feature in the software, but the S&P 500, a lot of these markets, great opportunities to short the market. And you'll see here that we'd had a really nice uptrend here in whole food markets. See our neural index strongly up there at a 1, our predicted moving average holding up. But this is where this crossover came through, really alerting us to, look, there's been an overall trend change in this market. So do you guys see that though? I mean, as far as how these indicators work, do you understand, okay, the predicted moving average, I get that to spot direction, and then I see, okay, how this neural index works as a 2-day forecasting tool, and also, does this look like something that you can incorporate in your trading? So let me know, guys, yes or no, is this making sense to you? And what I'll actually do is I'm going to move on to one more facet of this, which for me is absolutely my favorite point, because the VantagePoint software, what it's able to do is it's utilizing these neural networks, it's forecasting prices forward. So it's always looking a couple days ahead, plotting these values for you forward, and in addition to that, it actually provides individual intraday points so that you can effectively go ahead, set profit targets, set your stop losses, know essentially where the market should trade that day. So for me, I trade all markets. I trade absolutely everything. And what's great about this is you can sit down with the software. I go through my futures and my Forex markets in the evening. It takes about 10 minutes. I'll show you how to scan through all of this in about 5 or 10 minutes. And then I get up in the morning and do all my stocks, and you're really not missing any opportunity in the market. And because you can approach every market in the same way, with a tool that's consistent and accurate, it really opens up the trades that you can take, whether it's crude oil, whether it's currencies, whether it's shorting the market. It makes a huge, huge difference for your overall, the options that you have. But here we have the US dollar CAD, and I really want to focus in on this because what I want to focus in on is this bar right here. You see we have essentially a candle. That's a candle for today. Now, every single day, VantagePoint not only gives you that direction, so it says, look, is the overall direction of this market up or down, gives you that 48-hour forecast of, over the next 2 candles, average price is up or down, but also lets you know where a price is expected to move, the predicted high and a predicted low level. Now, me personally, we were looking at the crude oil market. We could see that going in a downtrend, and that tells me, look, I probably want to go ahead and short the Canadian dollar. But, if you want to go ahead and determine, hey, where should I be going ahead and accepting prices, these predicted highs and lows work extremely well. And you're going to see here that once this neural index goes up to a 1, a couple of really important things happen here. And now, mind you that these values that you're seeing are the values before the trading day happened. So this red line and this black line here were plotted before this day ever traded, just like we have here. And so what this is telling you is, look, as a trader, neural index up over the next couple days, expect the market to trade towards that predicted high. If you're a day trader, that's pointing out those targets for you and saying, look, where should I be targeting the market today? You see, again, you get a little pullback off that high, but then the next day, hitting that predicted high. I actually came in here this day here, try to buy at this predicted low, and almost caught it perfectly, and we moved all the way up to the predicted high of today here in US dollar CAD. I want to go ahead and move this back, see how much this is. It's been about over 100 pip move in just 2 trading days. So, this is extremely helpful. So many traders, they get so caught up. They're using so many different tools, so many different, Fibonacci and all these other things that, aren't consistent, aren't accurate, and honestly aren't using modern technology to give you an edge. And so that's what's critically important, because for me as a trader, when I have to come in here and trade US dollar CAD, you have to know, look, what is the dollar doing? What is the S&P 500 doing? What are Canadian stocks doing? What is oil doing? What is the Canadian dollar doing? So this is just absolutely vitally important, and for me personally, I just have no clue of really how I'd approach the markets doing this without this sort of tool. So does that make sense to you guys, though? I mean, do you see how these values all sort of work together? Your overall direction, your 2-day forecast, and then even giving you and offering you a predicted high and low, so that absolutely everything is really decided for you the next trading day. You have a complete forecast of what to expect and can make some very logical and profitable trading decisions. So how many of you guys, I mean, I'm actually curious, though, how many of you here, let me just know what markets you trade. If you trade futures and Forex and stocks, if you just trade one of those markets, maybe you trade options, let me know, because what will help here is the ability to scan through and identify these crossovers in the software. So identify these trend changes. What this can help you do is be presented with this information so that you're not having to look through a bunch of different charts. You're not going to have to look through 100 different charts for the option markets that you're trading. There's some tools here that I'm going to go through that will really show you how to do this. I see a guy's trading Forex here, excellent, binary options, stocks, options, and ETFs, excellent, U.S. stocks. So this is all in the realm of what you guys are doing. But remember, it really doesn't matter if you're trading options, if you're trading the shares. What makes the ultimate difference is timing, your direction in the market, and are you able to manage your trades properly? And really the only way to do that is having a consistently accurate, probabilistic forecast for you, and that's what the software is really ideal at doing. So what I want to demonstrate here, though, is I'm actually going to go ahead and open up the energy sector here to demonstrate the scanning feature. Now, there's quite a few markets here in each one of these sectors. Now, if I go up, if you look at the market tree all the way here on the left, I can go ahead and open up U.S. stocks. You'll see all these individual sectors. We've got about 12 here. I have the energies already thrown into this portfolio here, and but you can see all these individual companies here. So definitely just a ton of opportunities for you to trade, but knowing that you've got that consistently accurate forecast. So if we don't forecast consistently for it, we're not going to provide that forecast. I mean, you really only want to use these tools where you have those edges. So what you can do here, though, is really quite exceptional here. Now, you've got all the stocks thrown into our portfolio here, and I can actually go ahead and open up this IntelliScan feature. And what this allows us to do is dramatically cut down the time we need to do to perform market analysis. I've talked to thousands of traders, and for some reason, the vast majority of them spends way too much time doing market analysis. They're trying to, day trade. They're staring at charts all day, rather than, knowing, hey, if this is the market I want to be in, and the market's still forecasted to go up, don't day trade it. Just hold your position, stay in the market, and ride that trend. So this can really cut down the time for your analysis and help you really see a lot of the results that you'd like to see. Usually, I like to show these opportunities going long, but you're going to set up these scans: scan to the long side, scan to the short side, and it really presents you with those opportunities that you want to take note of. So you see here that just by changing our crossover criteria and making it a one-day crossover, because we want to find those fresh opportunities. We can make sure the direction is down, which most of the markets are right now, especially in the energy with crude oil going down. Neural index here, we can set that at a 0, and we're immediately presented with 55 market scan. We're down to 4 markets that are presenting opportunities for us, and so then we can enter these markets, whether it's to the long side, the short side, but then every single day be updated with, look, what should I be doing in this market? Should I be holding on to my position? Should I be riding this trend? Adding to my position, or all the indicators in line. You see just how accurate this works. We get our crossover to the upside. You see a very consistent forecast here. We get a little sideways action, but direction definitely up. But our crossover criteria, really demonstrating a lot of weakness over this time period. And I would imagine with the crude oil and all these things that this stock is probably significantly down right now. So this is what saves you guys just an absolute ton of time for doing your analysis. So does this look like something like you guys can do? I mean, all you really need to do is organize these portfolios. You can set them up by sector. If you trade the options, you can throw those options markets in there. But definitely going to cut down the time that you guys are using to do this type of analysis. But more importantly, analyzing those global market relationships that are going to affect your trading without a doubt. Because without a doubt here, Weatherford, an energy stock, is going to be affected by those things like we talked about, the crude oil market, the S&P 500, the dollar index, other energy stocks, energy ETFs are all going to play a very important role into how we can expect this market to trade moving forward.